Okay guys, I was scrolling through Reddit. I was looking for some juicy old bits about Ripple and XRP and just some real cool stuff to share with you guys, and I found a gold mine. Alright, I found a Reddit post here from 2 years ago. Wow, is the only thing I can say about it. So we're going to be reading it. I definitely want you all to hear this one, but today, as we do every single day, we are giving away 250 XRP as well if this video can get 1,500 likes within 24 hours, all right? Make sure you help out the channel by pressing the like button for the algorithm, but also to enter yourself into the giveaway. 3 simple steps: make sure you press the like button, make sure you are subscribed, and make sure you comment something down below. And having said that, let's deep dive into this Reddit post, as I definitely think it's going to be worth your time. Some words of wisdom. I've been an investor in the stock market for the last 20 years, and prior to that, I was a finance major in college. I'm presuming with the talks of Lambos holding to the moon that the typical crypto investor skews young, because most 45-year-olds don't really talk that way, but that's okay as times do change. What doesn't change, whether you are investing in stocks, gold, or crypto, are the fundamentals of investing. And now a quick little side note that I found important is that I've actually met quite a lot of 55 or even 65-year-olds that actually still talk about moon and hold. So I don't really know exactly what he meant with that, but hey, this article is from 2 years ago, so let's just put that to the side. What doesn't change are the fundamentals of investing. Investing in whatever commodity is driven by a couple of factors: emotion and factors that directly impact the value of the commodity. Now, that doesn't mean every commodity should be reviewed with the same metrics, or the allocation of emotion versus factors remains the same for each. But both are still true. The difference with stocks and crypto right now is emotion is directly affecting price, probably to a 3-to-1 margin over impactful factors. However, emotion has a short-term effect, impactful factors a longer-term effect. A good coin, stock, whatever, is led by a team that has their head down on their product and are looking to boost their revenue. They see a problem, desire, or need, and they believe that they have the solution that will remedy that issue. Like, for example, IBM, GE, and new stocks like Amazon all fill that void. Short-term, emotion will drive price up or down, and long-term, it will be driven by the value of an asset. It's why Bitcoin, so many years later, still continues to appreciate. They had a sound objective. Sure, there are dips and spikes, but the progress has been upward. And the question you need to ask: are you in it as an investment, e.g. long-term, or get rich quick, e.g. short-term? My advice to long-term investors is to find a coin you like and buy based on the objective and the team. Ignore the financials, market cap, price, circulation. That's all BS. And I'm sorry, as a technical analyst, I don't see the value in those metrics. And particularly when those metrics are fueled by emotion, it goes back to find a coin you like and hold it for a long duration. As for the get-rich crowd, good luck, because it's a crapshoot. Make no mistake about it. You can say you chose well and did your research and timed the market, but when the market is appreciating 100 times or more per year, it doesn't take much luck to get a return. Don't let all these guys who've made hundreds of thousands steer you because you think they're experts. They're not. They are not. The market is too new and, more than that, too emotional, and I'd almost trust a psychologist more than a professional investor to figure out this market. And I laugh at some of the impactful market factors and the assumptions on what's driving the market, because it's 90% emotion right now. Keep in mind, guys, this is from 2 years ago. Here's the question: other than fraud/fake tokens, how many real coins have lost total value? Few or none. In an efficient market, the bad coins would have been bankrupt, but that's not happening to real coins. Heck, Doge is still appreciating when it hasn't been updated in years, and the creator is scratching his head about the value. It's emotion, pure and simple, and that's why the crypto day traders are afraid of regulation. That's one thing you probably didn't know. They are. A rising tide takes all ships. So the long-term investor is going to receive the same success. The difference In 5 years, a majority of the long-term investors will have better ROR than the short-term day trader. Don't believe me? How many .com day traders/investors are still rich today? How many of those companies exist? Some, but not many. What is happening now is what happened in 2000. Emotion and new people that believed they could time the market ended up eventually losing everything. And I want to step in there by saying, not completely true. This is for inexperienced people who are trying to time the bottom or trying to time the top. This is not true for the fact that you can only make money by holding and not by trading. Because I do think in a lot of occasions you can actually make more money trading than holding, all right? So that's not one I would say it's completely true. But again, we're trying to read this as a book. So let's move on. Fundamentals, I keep my investments after the market crash in 2008. I believed in the companies I was holding in the market. Fundamentals is what will make you money. And you know what? As everyone here is focused so high on high risk, high reward of crypto, I've made 10+% holding in the market over the last 30 days, and I'm not sure how many can honestly claim the same in crypto over that same period. Will crypto beat the market this year? Very possibly, and they most likely did, but the risk is higher. And that's my last point. Please do not put your total portfolio in crypto, another absolute bedrock of investing, minus, or maybe high risk, minus high risk, is high reward. High risk means you can lose it too, and day traders during .com didn't heed that warning and many lost. And I'm holding 10% in crypto. The way I see it, my downside is minimal, but we get another 100,000 or even 1,000 times return. I'm still going to be doing very well for myself. Good luck to everyone. Peace out. And wow, did I like this quote? Why did I like this speech? Why did it get me hyped up? Why? Well, there's a couple points which I don't really agree with, but the general idea and sense is just perfect. I just loved this one. Mostly for the fact that it tells people, go for a longer term, go for something that you fundamentally believe in, as right now even the crypto market is filled with emotion and just speculation to a certain degree. Right? We all know whenever Grayscale, Square, and PayPal came about right now, and since the newer talks of regulation of crypto holding by banks has been coming out, it's making progress. But still, it's not there properly. It's not there at the end. We're getting close. It's already started, don't get me wrong, but we're not there yet. And the fun thing I read in this is the mindset that there was 2 years ago where everybody was claiming Moon, Lambos, huge hold, whatever. And a lot of them have sold over these 2 years. Trust me, right? This is a couple of weeks. This is actually just 1.5 weeks after XRP hit its all-time high, 3 weeks after Bitcoin hit its all-time high. There was a huge amount of pessimism. And the fun fact is, if you had held for 2 years, right, from this point on forward, you would have still been in profit. The only thing is, if you try to go scared, and if you actually bought at any point after this, literally any point after this, you would have been in profit with Bitcoin, as to give a good example then. You've been in profit for 100% sure, because we did hit all-time high, we even breached it. So any point you would have bought it, you'd been fine. People, though, get scared and they want to go for quick riches. They want to get rich quick. Now in 30 days, they want to be rich. That's not how it works. And that's the thing. Even if it were to work, you're lucky. All right. And the thing is, then it's not like you made a very amazing choice, because if your coin that you went completely crazy for and you put a bet on went times 1,000, there's a good chance there's a ton of other ones that did it too. And you're just, lucky to have bought that one specifically, but it wasn't really too much to it. Unless, as I said before, we get some crazy announcements, but that's the second side of it, which is not emotion, but really directly impacting value factors, right? For example, if PayPal were to say XRP is our main currency, we love it, yeah, that would be bullish. Or if the US, Congress were to come out with a statement saying XRP is our official, spokes currency, whatever, pick something, yeah, it would appreciate in value like crazy. But the bigger point is still, invest because of the value that it may bring, and invest because of kind of the Amazon question or idea. I mean, Ripple has actually a couple of times already said they want to be like Amazon in the sense that they want to start out with books as their first vertical and then move over into other things, but also in the sense that they know and see a problem, they have a desire to fix it, and they know that there's a desire to fix that problem. They know there's also necessity, and they believe that they can remedy the situation, or they have the solution. Exactly, again, the quote right here. And so they're doing that. And that's, for me at least, basically what we're buying into. Right? The fact that they are going to be changing stuff, the fact that they are building stuff, and Yeah, it might be true that some technical analyst expert here is not even better than a psychologist, because we've seen before people buy and sell like crazy at these illogical prices, but that's because crypto is not regulated properly yet. There's a lot of crazy money going in this right now, but that will change with time. And patience, in my opinion, not financial advice, is all we're going to be needing to get to these moons and Lambos. But yeah, that was it for this article. Very, very beautiful one in my opinion. And the fun part about it as well is, just as I said, it's been 2 years ago when things were really, really, looking bad because prices were going down like crazy. And look at them now. Look at how the prices have been performing right now. People are completely ecstatic at this point. But the same thing will happen again as prices move down. People will go completely afraid and say, I need to sell, when they actually have the fundamentals, or at least they believe in the fundamentals, but they're just too afraid to hold. And I'm just going to say, if you are really afraid of your money falling down by some percentages, you're in too much. You put in too much money, because I don't really check on my hold stash too much to see how it's doing. I more so check just because I want to know what the price is at, but I don't check how much money I have because I don't care. I'm here for a longer term time, all right? I'm not here to make a quick buck. Then we got some stuff from right now, but it was pretty trending. 17.5 billion XRP set to receive Flare airdrop as growing number of crypto exchanges confirm support. The important part about this is we're actually going to be seeing a better ratio to Spark than we thought, because, well, Spark is in, or at least the snapshot is in about 2-3 days, 2 days for me officially. And since there's only at maximum 20 billion that's claimed, it's most likely going to be like a 2-point-something ratio that we're going to be getting, right? Per our XRP, which is pretty cool to hear about. Again, it's universal though. It's like everybody's going to get this, so it doesn't really matter, but it's cool to know that it's a little bit more than that. Then, is Ripple's stake in XRP an asset or a liability? Head of R&D at Block Digital analyzes key crypto question, which I personally don't think is a really good question, but a lot of people went on to discuss this one, and it's definitely a point of interest, so I want to quickly read these quotes for y'all so we can get a good idea. A lot of criticism levied at Ripple, the company, is that, well, they're the largest holder of XRP, they represent this huge counterparty risk where they can dump it into the market, and you, as an investor in the token, are basically exposed to that large slippage. The difference between Amazon shareholders is they could create new shares and they can stock splits and things like that, whereas with the total XRP supply known, you can't really do that, and all you can really do is play with that 99 or 100 billion XRP, and that's your maximum allowance. Quote, for me, XRP is one of those ecosystems that's the most transparent. The fact that Ripple even communicates this to the XRP community, talking about their holdings, by the way, they have no obligation to do so. They had no obligation to put these XRP into these escrow contracts, but they did so anyway, and they report exactly how much they print out, how much they sell, and that's another key of transparency. They report exactly how much they sell. Now, Coinmetrics did an excellent analysis of their release schedule and exactly whether it matched up with their claims, and basically was able to create a curve, a monetary issuance curve, and compare it to their reported amount of selling, and they did a very deep dive into how accurate their claims were, and they were pretty close. There were some minor discrepancies, but the work that they did was excellent in the analytics, but it is also essentially validated for an investor that yes, the system is pretty much working exactly like they intended. One important thing, in my opinion, to understand here as well is that we as a community could decide to have those XRP gone as well. All right, it's not like it's actually in Ripple's control. They have it, but it's not like they have it forever if it were to be decided that it should be destroyed. Something you should understand. And another quote, the XRP ledger specifically tried to solve payments. Why is it trying to do that? The consensus algorithm that it shows has a very high throughput. It's roughly 1500 TPS, transactions per second. Bitcoin has about 6. They say 3 or 4, it's about 6. Ethereum is about 24, but that's actually going to be going up with Ethereum 2.0. Here they're saying about 15 TPS, can also be so. Depends, of course, on the congestion and you know, I'm talking ideally. But let's say Bitcoin, 4 TPS, Ethereum 15 TPS. What does that mean when you have availability of 1500 TPS as your settlement layer? If your token has a lot of liquidity, it means that you can build some very interesting use cases on top of that, because if you have a very fast settlement layer and any layer 2 that you can build on it can settle very quickly at the end of the day and reach that finality, that's important for transactions. That's, again, that security that the transaction went through to counter double spending and stuff like that. Maybe the banks in local economies say, hey, I'd like to have some XRP because I have, Because if I have XRP, I don't need to have 6 or 7 other currencies. I don't even need to have the dollar if I have XRP. And all of a sudden, that gives me access to Japan, to Mexico, the Philippines, Brazil, by holding one supranational currency that has all of these liquidity pairs in different jurisdictions. You can all of a sudden transact at scale, and that's a global network effect. The small network effect on the local jurisdictional pair between the Thai baht or peso can scale to a global network effect, which is true. The only thing they're missing out on is XRP might still only be used as the middleman, because a country could just hold their own local currency and just switch it over whenever they need it, because that's what XRP is for, right? To make that transaction only take 3 seconds still. So they don't necessarily have to hold XRP for that, but the idea is pretty cool. Then here one, wallet reserve. What if hypothetically 5 billion people on Earth signed up for an XRP wallet? Would the 20 XRP reserve requirement cause the price to skyrocket? If that's the case, shouldn't there be a major effort just to educate the people how to sign up a wallet? Mike said here, all reserves from trust lines to account reserves can be lowered by validator voting. If the price increases, all accounts can be deleted and 15 XRP recovered. And here, yes, for those who weren't aware, you can delete your XRP account through XRP toolkit by click into your profile and pressing proceed under the delete account section. And then he said, oh, this is new to me. Does this also work with your XRP Toast Store wallet? And as I don't personally use yada yada yada, it's an interesting discussion to have though. Again, how exactly this is all working, because I actually never thought about it, if you're honestly asking me. Right? Honestly, about this whole situation, I never really thought about the whole situation about what if people were to just completely lock up their XRP. But then again, I think there's answers to that, and it's not a big issue. The only question is, the more accounts that are being made, is it really more scarce then? I'm going to say yes. I'm going to say yes, because the 20 XRP that's being used for account creation is locked. On the contrary, I mean, it's just like people are holding those coins, and if they were to hold it or have it locked up, it's not like there's any major difference, right? So from that perspective, again, it's kind of a no. So I don't know too much about that one. And then Ripple token economics not completely clear. The thing here is again, there's just always going to be people who just don't get the whole Ripple idea, who don't get the facts. And it's also the fact that people just say XRP is not going to go up because of Ripple's efforts or because it's a bridge asset and yada, yada, yada. XRP won't really go up. Some people forget that it's actually, for a huge part as well, about the idea that XRP has such a huge use case that, again, it must be bought. Because if you think about it, some currencies out there, they're actually not really worth anything until you consider exactly what you can do with those currencies. And actually, that's the main premise of a currency, to be used for something, which is what gives it its value. Why would one, again, I'm talking about some specific actually, but I don't know any of the names I'm talking about. Why would any one currency be worth more than the other? You can't say scarcity, which is, again, another important part of XRP, of course, since it's deflationary in that nature. You can't call it scarcity, but also the fact that one's use really outclasses another. If you compare gold and silver, it's actually relevant that there's, of course, a difference in scarcity as well, but the use for silver is actually way more than gold. So had they had the same amount of kind of metal out there in the world, it would most likely have been so that silver would actually be worth more than gold, because you can do a lot more with it. The only problem is, of course, in this case, gold is a lot less available in the world. So theoretically, because scarcity is more important than the use case in some way, shapes, or forms, it just depends a little bit. But in this case, yes, that's why it's worth more per thing, or per gram, so to speak. However, maybe if you were to look at complete market cap of them both, it could be that eventually things with the better use case like silver actually take over. It's kind of funny if you start to think about it, because there's the bigger and long old discussion of scarcity versus use case, which crypto has also been having right now. But that's too much. For right now, the bigger thing is XRP will go up because of its use case and the idea that everybody's going to be using this, or possibly, if you believe in it, because of some bigger institutions claiming it as their token or using it for some specific things, which is just going to get speculators going crazy, right? But that's, again, for yourself to decide. There's multiple reasons why it can be going up. Hey, yeah, that was it for today's video, guys. Make sure you check out Webull, link down below. You can get 4 free stocks by just making an account, and that's actually 2 free stocks for making an account and 2 more for putting up $100 inside the platform. Just check it out, link below, for US people only. And I'll see you guys again in another crypto video.